Well, thank you everyone for being here today. Good morning, and I want to thank everyone for being on LinkedIn Live today. Today, we're going to be talking about transparency and better capital resources and how to get the best of both worlds when you're seeking some commercial real estate financing options. My name is Jerry Frank, and I'm the co-founder and CEO of STRATAFOLIO. We're a cloud-based software solution that's focused on that mid-market commercial real estate owner. And we're designed to help owners both save time and money on managing their portfolio. And today's conversation is all about financing options and some stuff that you may not even be aware that exists. So with us today is Chris Peters, who is Director of Inbound Origination at StackSource, and Huber Bongolan, who is Director of Capital Markets, and they're both from StackSource. And StackSource is a tech-enabled commercial real estate financing platform that provides transparent, efficient access to the capital market for commercial real estate investors. And for the past 3 years, they've been one of the fastest growing commercial mortgage companies in the United States. We're super excited to have them here. Their financing marketplace surpasses $1 billion in closed transactions just in August 22 alone. So the format for today is going to be 20 minutes of discussion followed by any Q&A that comes from the audience. And with that, we'll start our conversation. So why don't we start with first?
Awesome.
What is StackSource?
I can take that and Huber certainly jump in. At the simplest form, we're connecting the best possible capital to real estate and investors. That's a very simple business model, but the sort of meat behind it is a very unique tech platform that we've built over a number of years. That is, you can sort of think of it as a dual-sided platform where on one side we have real estate investors, sponsors, owners, and operators coming to us seeking some sort of capital to help fill out their project. And on the other side, we have our capital sources that range from banks, credit unions, life co, debt funds, agencies, CMBS, private lenders, family offices, REITs, and that's on the debt side. We also have other capital providers that will provide mezz financing, preferred equity, PACE financing, LP equity, co-GP equity. So we have a really unique suite of capital that fits nicely into our investor clients' capital stack. So, our business is really pairing up that capital to those projects. And really the way we go about it is our unique technology platform that we build a digital OM. The deal gets automatically matched to a subset of our 1,000+ capital sources through an internal algorithm that we've built over the past few years. The entire process is streamlined through our tech platform. We're really striving to give the investor a better experience, a faster experience, a more efficient experience, and really a more transparent experience. Our industry has been plagued by bad actors and opaqueness, and so we're really sort of pulling the curtain up and saying, hey, here's what we do, here's what you should expect, here are the fees associated, and really giving the investor the best possible experience.
So a couple questions as a follow-up to that. When you said OM, what do you mean by OM?
OM is just an offering memorandum. It's really sort of you can think of it as a presentation or a summary of a deal. The OM that you might see floating around the internet or that an investment sales broker or realtor sends over is property specific. It talks about the market. It talks about the property itself, the rent roll, cash flow, etc. Ours is a little different. It really focuses on the financing aspect. What is the cash flow? Is it meeting certain lender, loan metrics such as DSCR or debt service coverage ratio, debt yield? There's a lot of metrics that we focus on to make sure that a property, the cash flow is strong, it meets certain criteria. So it's a little different than a traditional OM, but it's digital, it's live. Most OMs that are floating out are static PDFs.
Right.
Ours is live. So if we receive a new piece of information or something comes to light, we can make that change immediately, and that OM is changed, on the spot. So it's unique that it's a living, breathing, live document.
Very nice. So the one of the questions I have, because it's always interesting to see how companies came up with the name, how did you come up with the name StackSource?
Yeah, and this is where I'll jump in. So Chris and I, we aren't actually the founders. We have two co-founders, Tim Malazzo and Nathan Wall, that came up with the name. But it was always an interesting conversation that I had with them because I loved it myself. So StackSource is a combination of two industry key terms. One of that being the capital stack, which in
Mm-hmm.
commercial real estate, the capital stack of both debt and equity. And then,
Mm-hmm.
of course, the word sourcing, which means finding or placing. So this
Mm-hmm.
is what StackSource specializes in. We help investors in commercial real estate. We help them source or find their ideal capital stack,
Oh,
of both debt and equity. So that's how the name came about. But truthfully, there were a lot of ideas. In any startup, you have a lot of ideas. What do you
yep.
name your company? How did you come up with STRATAFOLIO? How did we come up with StackSource? So imagine a whiteboard just filled with ideas. A lot of
Yep.
ideas, different iterations playing around. Do we do source stack, source capital, capital source? So
Mm-hmm.
after enough, once we pinned down, like once the founders pinned down what were the top ones that made sense for what we do, it
Mm-hmm.
was testing, going to our potential target market, doing some
Mm-hmm.
A/B testing to see what played best, what made the most sense, and
Mm-hmm.
ultimately from this, let's say, pile of ideas, StackSource rose to the top. So that's how the name came about.
Very good. And what made you develop this product? What was the catalyst for it?
Yeah, I can start there. I think I mentioned earlier the sort of opaqueness, the um, just the lack of efficiency in this market. It's a very old business, right? Pairing capital to tools. A
Mm-hmm.
lot of times it was done with a handshake, and the broker or the intermediary sort of went off and did their thing and came back with, hey, here's the best solution. Our founder, Tim Malazzo, he comes from a New York-based real estate family, and so he had an into the inner workings of commercial real estate.
Mm-hmm.
But with technology, there's just so many different ways to make things more efficient. So I
Right.
think number one was, hey, if I'm a real estate investor and I want to go out and buy this, multifamily property or this office building or shopping center,
Mm-hmm.
how do I put together my cap stack? Where do I get the money from? Is it the
Mm-hmm.
best? Is it the best possible? Part of the cap stack is going to my local bank going to be the best option, or is there
Mm-hmm.
another option out there? Uh,
Right.
so I think it came from a number of reasons and drivers to create the company, but really, to make different financing solutions accessible to all investors, to level the playing field, to just make the process much more efficient.
Mm-hmm.
And we harp on transparency, right? The more the investor or client is kept in the dark, the more they just don't know what's going on, and they don't know if
Right.
they're getting the best possible deal. So if we can, create more transparency and just keep them in the loop and keep them up to speed
Mm-hmm.
on what's going on and what we're doing and who we're talking to and what those conversations are how they're taking place, and sort of what the feedback is. Creating transparency in this market is key, and it
Mm-hmm.
builds trust, it builds rapport. So there's a number of reasons we build the company, and I think we're trying to hit on those as we continue to build and grow.
Mm-hmm.
But yeah.
Yeah, to
Yeah.
follow up on what Chris was saying there, um, we are empathetic to the fact that your viewers, whether they be real estate developers or investors, there's so many hats that they're wearing. There's so many things that they're juggling. Financing is just one piece. The,
Mm-hmm.
the strategy of their business plan, the design of their buildings, the execution of their business plan,
Mm-hmm.
entitlements, if they have to go through that to get approvals and permits. So many different things that they have to juggle. And
Right.
financing, capital markets is such a fluid piece that changes players in this market, whether they be lenders or equity
Mm-hmm.
investors. During the hot times, you see a lot come. during
Yep.
recessions or where capital is harder to come by, interest rates are up, which we'll get into
Yep.
later, they go away. So it's such a fluid market that your viewers, your clientele, people watching this today, financing is like, wow, who do I go to? It's
Mm-hmm.
changing. You're kind of working off referrals or maybe people you've gone to in the past. It's
Mm-hmm.
hard. So
Right.
with StackSource, we've decided let's focus on that one piece. You mentioned it in your intro, which we appreciate, tech enabled.
Right.
What makes sense to use technology? What makes sense to keep the human aspect? You see me on here, you see Chris on here. Absolutely, you still have us humans that empathize with what you're going through. You need
Mm-hmm.
that relationship touch, but there are parts of just this financing process that we're talking about today where technology can make things smoother, can make things
Mm-hmm.
better, a better experience for clients. So
Yep.
that's what we're specializing in. That's what's really important to us is how can we make this one piece of the entire puzzle? How
Yeah.
can we make it easier for you guys?
Yeah. It really is. I know commercial real estate has struggled to bring in technology, but it's happening now. I think there's a lot of things that have been a catalyst for that happening, but people who are adopting technology now are going to be more successful in the future, just because the speed at which they can operate, the opportunities that are available to them. It's why we created Stratafolio. But all of this then kind of leads me to the next question of what are some of the advantages, aside from some of the other things that you've mentioned, what are some of the advantages of working with StackSource?
Yeah, I can start there. You know, the capital landscape, and we've definitely noticed it since COVID, and especially this year with rates going up the wazoo, and potential recession. Capital is changing, right? The players or the capital sources sort of come and go. They change their parameters on almost a daily basis, just how the wind is blowing. So there's a lot of changes going on. Huber and his team, Huber's our head of capital markets. They have a pulse on who's in the market, what are they looking for, right? What's their criteria? What's their investment criteria or lending criteria? How has that changed, right? Rates are going to bump up potentially 50 basis points today. Are we headed into a recession? Are we in a recession? Are we going to avoid a recession? There's a lot of unknowns, especially during COVID. Lenders disappeared, right? They have a website, they've been doing deals, and all of a sudden you call them up and they're no longer there, or they're no longer putting out money. So things change. And I think what an investor or client can expect from us is a really good pulse on the market, on who is doing deals, who is financing deals, what are their terms, what's changed, what should we look out for. So I think that's definitely a key experience that an investor is going to have. As we've mentioned, we're a tech company, right? So the process is going to be much more efficient. You're still going to have the human component, as Huber mentioned, right? You're still going to have that professional advisor that's working for you on your deal. But the technology component really, it brings transparency to you as the user, as the investor. It brings speed, it brings efficiency. We talk to folks in the industry all the time that are either at smaller financing companies or regional financing companies, and we sort of ask them, how do you do your business? And a lot of them say, well, I get a deal and I sort of think about who to bring it to, or I go to a spreadsheet.
Right.
And that's great. That worked when life was
Right.
simple, times were easy, and you knew exactly who to go to. But we're in an environment now where things are changing, and things are changing fast, and so you really need a platform or a system that allows you to adapt quickly. And I think that's something that we've brought to the market.
Yeah, and with StackSource, you asked what the advantages are. We're a teammate of yours. We work for your client. We work for you. You're hiring us as your outside CFO. We come with our breadth of experience, not just from individually Chris and myself, but all of our team members that have at least a decade worth of experience. They have their own relationships. So you get an outside resource, a teammate to yourself, to help guide you throughout this entire process, as well as open these doors to capital market relationships. that you may have not had access to previously, right? When your clients are talking to different lending shops, whether they be banks, credit unions, life companies, whatever it may be for their deal, right?
Yep.
Incentives are a little bit misaligned because the person on the other side of the phone has a different boss to report to.
Right.
While with us, you're our boss. We're working on your behalf and we're highly incentivized to make sure you're happy and the deal gets to the finish line, because that's how we get compensated, is by happy clients with closed transactions.
Right. Right. And I think a lot of individuals don't realize that, you know, they're used to going to their local lender, their local credit union, and just that's where they go, that's where they get that deal done. But they may not realize that there is a whole other layer of opportunities available to them,
Right.
that they didn't even.
They may not even
Yeah.
realize, like, hey, who are you speaking to? Is it like, let's take a local credit union, because I run into this all of the time. Is it Steve from your local church that just joined this credit union a month ago and you want to, help out your buddy by doing business with them?
Mhm.
Or is it Mark that sits at the head of credit committee, who's the chief decision maker, where he has a pulse on exactly what his credit union members are looking for? He's been there for 10 years. Right? Do you have that? Which relationship do you have? Because
Right.
even though, yes, we're introducing technology, it's still very much a relationship oriented business. And
Yep.
StackSource, those are the types of relationships we're building, is
hmm
who are the key decision makers at these firms that really get
Yep.
your deal to the top of the stack, top of the line, because time is money. And we want to make sure we get yeses or quick nos.
And I
And
think, and one thing to add there, in the residential space, it's all about rate, right? What's the rate on my home, or what's the rate on my single family investment property? In the 310, 320 deals that we've successfully closed for our clients, less than 50% of the time, the lowest rate has won. So in the commercial space, it's a lot different. There's a lot of other features. There's a lot of other structures that are more beneficial than, the lowest rate. And so when you do go to your local credit union and they offer you, XYZ rate, and you take it because you think it's low, there might be other parts of that structure that just aren't as advantageous as shopping it around and seeing who else has a better term length, a better amortization, a better prepaid penalty, a lower fee.
Right.
And frankly, this is something that I think is new to the industry. We're really evaluating on a qualitative basis, how our experiences are going working with these lenders. And I think, we're developing a lender rating system that
Nice.
it incorporates, everything from rate, term, structure to actual, how was that closing? Did I close with the lowest rate? It was an absolutely painful experience. I might not close with them again.
Right.
So there's a lot of other factors that, go beyond rate and what, what people initially consider as the best deal.
Yeah.
Chris just gave your clients a sneak peek of what's to come on the. We're gonna keep that's internal tool for now, but we'll figure it out. Maybe it all in an effort to make the process better for your clients. But yeah,
that's wonderful. Yeah, we had a LinkedIn Live a couple of weeks ago with Dina Zimmerman, and we were talking about, now as rates are going up, well, they may go back down, and that prepayment penalty now becomes a factor in what you're going to do in terms of that next loan that you take out. You might want some different terms there. So to your point, it's not always about rate.
Yeah.
So who are your typical customers?
Yeah, great question. And it's changing. We sort of bucket them in sort of three different buckets. We have individual investors that are buying their first, second, third, fifth, 10th investment property. That's sort of the one bucket that are very active users of StackSource. Our second bucket that we're growing more and more is our mid-market institutional bucket, and these are everything from a small company that's either putting out money from friends and family, and they might have a fund, or they might syndicate deals to, a real institutional group that's vertically integrated, right? Maybe they have a construction component to them, they have a property management, they have an asset management. They're really an institutional shop. And so those are sort of the two main users that we're seeing today. There is that third bucket, that large private equity company that manages money for pensions, endowments, sovereign wealth funds. We've definitely seen them sniffing around, but I would say the first two buckets are our typical users today.
Okay. So when someone engages with your team, what is the process?
I can kick it off, and then I know Huber can jump in because he's got a lot of experience there. We sort of think of it as twofold, right? The first time we engage with a client, we are learning as much as we possibly can about that team, that sponsor, as well as the property, their business plan. So we're collecting information, we're asking very detailed questions, we're collecting documents, and we're at the same time we're building that digital OM on our platform. As quickly as we can get that information, it really does speed up the process. We are not in the business of going out with a half-baked deal or with an idea. We want to be confident behind what we're bringing out to the market. So we do ask a lot of questions, and Huber and his team are fantastic at sort of uncovering all the minute details of a deal. But once we create a deal on our platform, we then, like I said earlier, the deal automatically matches to a subset of our lenders, whether it's new construction in Iowa, a refinance in LA, a value add in North Carolina. There's a lot of different factors that go into how a deal matches to a subset of those lenders. But once a deal goes out to lenders, we send it out through our platform. Lenders will receive a unique link. They can click on that link. Through our platform, we can track who's opened it, how many times they've opened it. We can converse with them. As Huber mentioned, we are actively involved in the deal. So we are hounding these capital sources. I'm sure everybody here has sent emails out and made phone calls and left messages, and you never really hear back. That's not enough for us. We're going to sort of track down everybody, knock on every door, have those conversations. And then it's all about, pitching the deal, talking about the sponsorship team, the project, negotiating terms, collecting term sheets. A client will come to us and say, I need a term sheet for this. And, that's a very simple way to put it. There's a lot that goes into it, and I'm sure Hubert can expand on it, but, we're involved start to finish all the way through closing. So, when we sign a term sheet and we move forward with the lender, we're still around. We're still going to be working on the underwriting, on due diligence, third-party reports, all the way up to closing. So we're involved start to finish. Huber, I may have missed some stuff.
No, that was great. You gave great detail on kind of our three-step process after a client engages us. So those three steps, we have a fun name for it internally. We call it UPSIDE, and each one stands for an acronym. So remember UPSIDE. The first step is up. So underwriting and packaging. That's not just taking our clients, what they give us, and just throwing it to lenders. It's like, we really want to go in there. Do you have comparables to support your assumptions? Back up everything, because we take your deal very seriously, and we want to make sure that when it gets to that second stage, first stage underwriting and package, second stage seeking interest, going out to market, going out to lenders and investors and seeking interest, UPSIDE. When we get there, they're expecting a certain level of packaging, a certain level of underwriting, professionalism. They know that when they've received a package, that when a deal is coming from StackSource, they know what they're going to get, and they know how to get through it quickly. That's the tech side of it, how to get through to make quick decisions, right? They can't be sitting there reading a 100-page novel. They're going through dotting deals, and we respect that. We understand that our lenders, they want to make their commission based also, probably. So they need to make quick decisions. So underwriting, packaging, step number one, seeking interest, going out to market, knocking on every door, understanding the capital markets, a lot of follow-up, developing those relationships like we talked about. So that way we can create a market for your client and get quotes back, right? So for any given deal, imagine maybe every deal is different, but let's just say 3 to 10 quotes come in. After we've thoroughly sought interest from the market and we have those quotes, now it's going back to your client and having a discussion. What do we like about each quote? Do we have a top one or top two based on what's important to your client?
Right.
Maybe rate is at the top of their list, but maybe prepayment penalty is a strong number 2. Maybe
Hmm.
non-recourse is a must-have for them. They don't want to sign
Right.
recourse. It has to be non. So we go through that, and there's going to be pros to cons to each lender, and that's where
Hmm.
Chris mentioned that lender rating system comes in, right? How can they fulfill what the
Hmm.
expectations our clients are? And there's probably going to be multiple rounds of negotiations in that
Hmm.
seeking interest portion before
Right.
we actually choose who we're going to go with. Then the last part of upside, DE, deal execution. So it's boom, we've signed that term sheet. Your client has submitted their initial deposit, and now it's all of the due diligence of that funding process, engaging third parties, appraisals, title,
Hmm.
property condition reports, environmental, if we need to. What are all of the
Hmm.
things that we said in our underwriting and package that now the lender is requiring us to back it up? You said
Hmm.
that in 2022 February you made X, Y, and Z. Show us the audited financials. If they
Hmm.
require that, what are all of the
Yep.
things in their due diligence checklist that's required? This deal execution phase, of course, the last part of it is we want to see wires go through. We
Yep.
want to see the funding from the lender hit your client's account. We want to have that funding celebration, the congratulations email that you're so
Hmm.
used to, and we want to make sure that you're well taken care of along the way.
Yeah. One of the things that you mentioned was the making sure that all of the information is there and
Right.
accurate. One of the things that what we have heard from lenders who use Stratafolio is that being able to produce that rent roll quickly, being
Yeah.
able to produce those financials quickly, being able to share information on a rapid, rapidly and completely is definitely going to be in that investor or that owner's favor if they can do all of those things. So um, we are getting to the end of the hour. Or the end of our half hour here. Is there anything that we haven't talked about yet that you'd like to quickly mention?
Chris, you want to kick that off?
Yeah. Huber and I can talk a little bit about the market that we're in.
Yeah.
It's a unique market. We went through sort of a rough patch in 2020. 2021 was really rosy. Deals were getting done. It was sort of
Right.
hard. You walk into a credit union. It was hard to walk into a credit union and not get a deal.
Mhm.
That's not the environment we're in today.
Right.
Lenders are pulling back. Lenders are, their metrics have changed, right? They're becoming a little bit
Mhm.
more conservative. So, that's something that we're noticing. That's something that we're navigating.
Mhm.
As Huber mentioned, we're constantly talking to those lenders. People ask us, hey, where are rates going? Or, hey, when are things going to get better? I think things are going to get better. I don't know how soon, but I think they are. But I think, real estate investors can take advantage of this, and they can.
Mhm.
There's definitely a lot of opportunity. There are deals out there to be made. Sellers, I think, need to have a little bit of a reckoning, right? So every
Mhm.
deal sort of is contingent upon the seller being a little bit more realistic.
Mhm.
Today we're probably gonna get another 50 basis point interest rate hike. So I think that's probably baked into the market. How much longer do they continue to raise rates? How high do they go? Once they get there, how long do they stay there? There's a lot of
Mhm.
unknowns. But I think we're trying to do our best to have conversations with capital sources and sort of get as much information as we possibly can, because we have such a broad reach into the market.
Yeah.
And getting just calling up your bank and saying, hey, where are things going? That doesn't cut it. There's so many different
Right.
factors.
Right.
I can kick it over to you.
Yeah.
You do a lot of the grunt work there, and there's a
Yeah.
lot to talk about.
Absolutely. And this is LinkedIn Live. So for anyone that's joining us right now, we're really excited because whenever the Fed speaks, we listen. Jerome
Mhm.
Powell, the chairman, he has the power to move markets, right? And what
Mhm.
he says in his speeches when they meet, everyone's reading every single word and looking into every single word to try to get
Right.
some type of crystal ball into
Yeah.
what 2023 is going to look like for us in the
Mhm.
macro environment. So we're excited. Today, in about an hour from now, he speaks. We'll all be glued to our screens to see. But Chris had mentioned it. There's things that we're expecting. 50 basis point increase. We expect him to talk about being happy that although inflation's still increasing, not as much as they originally expected. So we're excited, and we're expecting him to say something about along those lines. Also to talk
Yeah.
about how tapering inflation is still the #1 priority. But what'll be interesting to see, how much do they still increase in 2023? How much do they slow that down? A lot of what's going to happen later on today in about an hour is going to be signaling for the future and what we think is going
Right.
to happen. So it'll
Yeah.
be interesting for us, right? It'll be interesting for us to watch that. You've already seen, everyone I'm sure that's tuned in on this call or watching this call has seen what has happened in the past 6 months. So we're excited to see, to get some type of direction on what the next 6 months to the next year will look like.
Yeah, you guys are really leaders in this industry now. We'll put in our notes afterwards, but there is a recent article out in The Real Deal that that StackSource put out. I think is definitely worth people taking a look at. So I am going to share my screen here to share all of the contact information for StackSource here. There we go. And I just want everyone to know, if they want to reach out to StackSource, there's their contact information on the screen. And I'm also excited to announce that we did start a partnership with StackSource, and there will certainly be more coming from that, from STRATAFOLIO in the future, because we're really impressed with what your company's created. So please feel free to contact Chris or Huber. And then you can join us next year on January 18th. We're going to do a go live with Fixer, a photo and video editing company designed specifically for real estate photography. So thank you, Chris and Huber, for being with us today. Until next time, everyone, take care and be safe.